Fusion Mobile, quality e-learning experience on the go.
You are welcome to Fusion Mobile e-learning platform. I'm Olokobi Kwalimi by name, the accounting tutor, and in this class we'll be teaching purchase of business. So we'll be looking at the introduction on purchase of business. We'll be looking at entries in the book of accounts, whereby also we're going to take an illustrative questions on the topic. Firstly, we have an introduction. Then we'll be looking at what purchase of business is all about. Generally, if a business is to be sold or is to be acquired by another person, what will happen? That cost of purchase consideration. That is when some aspect of a business is taken by a purchaser, that is by an external owner. So that means the business is to be sold to that purchaser by the vendor. So anybody that owns a business, the aspect of the business is the vendor. So when the person in which the business is to be sold to is the purchaser. So as stated earlier, the old business will have been able to build some aspect of good name, reputation, management and everything. So that costs for goodwill. So it means the purchaser will have to pay some aspect of goodwill to the owner of the business. So when talking about the goodwill, which represents the extent of purchase consideration over the net asset of the business. So that will be the responsibility of the purchaser to pay for goodwill, and goodwill will be taken to the book of the account as assets. So, and again, it can occur also whereby the purchaser might even pay less than the net assets. So if the extent of the net assets over purchase consideration, that becomes the capital reserves. As stated earlier, this means the person has gained some aspect of reserve in the business, which we call that capital reserve, and that person will take it to his balance sheet as a capital reserve. So when having or purchasing the particular business, the vendor will usually value some aspect of asset, that is the fixed asset in the business, stock and everything in the books. So all assets will be valued. There will be evaluation of assets in the business whenever the business is to be acquired. And the next thing we have entries in the book of accounts. Okay, the first thing we're going to have is we're going to look at purchase consideration. Purchase consideration, which is the first entry. What are we going to open? We have purchase consideration. Number one, where is the purchase consideration? Is for us to debit purchase of business account. It's for us to debit purchase of business account and credit the vendor account. And credit the vendor account. So purchase of business will be debited, while the vendor account will be what? Will be credited. So the next thing we'll be having is the valuation of assets, that is assets taken over by the purchaser. So assets taken over in the book of the purchaser. So assets taken over, the double entry is for us to debit asset accounts. Again, debit asset account and credit hire purchase purchase of business account. Purchase of business account. Then number three, also liabilities taken over in the business. Liabilities taken over by the purchaser and coming into the business for us to debit purchase of business account and credit liabilities account and credit liabilities account. Now the next thing, excess of what if we are having excess of purchase consideration. Excess of purchase consideration over net assets, which is the goodwill. So we have assets of purchase consideration over the net asset. So when you have assets of purchase consideration over the net asset, that becomes the goodwill in the business. So double entry is to debit the goodwill account. I'm going to debit goodwill account and credit purchase of business with the amount of goodwill in the period, and also we can also have excess of net assets over purchase consideration. That is the aspect in which the purchaser have some capital gain. So double entry is for us to debit purchase consideration and have capital reserve credit capital reserve in a period. So that becomes a capital reserve. And again, cash paid to the vendor. When cash is paid to the vendor, we are going to debit vendor account and also credit what? We are going to credit purchase of business. We are going to credit cash account. Yeah, cash paid to the vendor. Now 7, that is double entry. We are going to, so settlement of vendor with shares. So if the vendor is settled with the shares, we're going to debit vendor account and credit share capital account. So that is all about the account entry. In purchase of business. When the purchase consideration and purchase is being considered, we're going to debit purchase of business account with the purchase consideration and credit vendor account. Thereafter, we're going to when asset is taken over, we're going to debit asset account and credit purchase of business account. So liability between the period when liability is being taken over, we're going to debit purchase of business account and credit liabilities account. And also, number 4, excess of purchase consideration over net assets is that the goodwill, which is the goodwill, we are going to debit goodwill account and credit the purchase of business. And when there is excess of net assets over purchase consideration, which is the capital reserve, that is the purchaser has gained what we call capital reserve in the period, we are going to debit purchase consideration and credit capital reserve account. So again, if cash is being paid to the vendor within the period, that is the person that will have the business to be sold, the vendor account will be debited while the cash account will be credited. And also settlement of vendor with share capital. The vendor might not be settled with cash. So when the vendor is being settled with share capital, what are we going to do? We're going to debit vendor account and credit share capital account. Let's take an illustration on the topic. So we have an example now. So we have Andrew Young agreed to take over the business of Ayo. It takes over the asset and liabilities with the exception of cash balance. That is not possible. You can't take over the cash balance. So the balance sheet of Ayo as at 31st December 1976 is this. So we have the features, we have the motor van, we have debtors, we have cash, and we have stock. So we have capital introduced by Ayo itself, we have creditors in the period. So Andrew Young takes over the business on the following terms. Now the purchase consideration is that is to be paid by Andrew Young is 150,000 naira. Assets are to be revalued, that is, there will be evaluation of assets. Now the features become 60,000 naira, motor van becomes 25,000 naira, debtors becomes 13,000 naira 500, while stock becomes 15,000 naira. Now the purchase consideration was paid on January 6, 1977. So January 6, 1977. Now we have to generalize entries. We have to prepare the journal entries in respect of the acquisition, and also we have to prepare the ledger entries, and also we have to prepare balance sheet of Andrew Young. Now the first thing we are going to do is to calculate our expense of purchase over net assets. So let's calculate our net assets in the period. All of the assets taken over is took over the features, the motor van, the debtors, and the stock, but it's unable to take over this. But there is a revaluation on that. So let's find the total assets in the period. So total assets taken over by Andrew Young is going to be features, which is 60,000 naira, plus he took over the motor van, 25,000 naira, then plus debtor, 13,500, plus stock, 15,000 naira. Then that give us we have 60,000 plus 25,000, then plus 13,500, then plus 15,000 naira. So that gives us 113,500, which shows the total assets in the business. Now we have the liabilities. Liability is equals to creditor is going to take over that also, 13,000 naira. Now we can easily calculate our net assets. So our net asset in the period is net assets is equals to total assets minus what? Liability. That will be total asset is 13,500. Liability is 13,000. So we have 105. Abi? Okay, 100 and 500. So that is interesting, minus 13,000 there. So 100 and 500. So that is the net assets in the period. Now goodwill, we know our goodwill is the excess of purchase consideration, which is 150,000 naira to be paid by Andrew Young, minus the net assets, which is 100,500, and then it becomes 49,500. That is the goodwill of to be paid by what? By Andrew Young to Ayo. So we have the goodwill. Now, so we have to prepare the journal entries now. Answer the questions and prepare the journal entry. We have A. We have journal. So we have debits and we have credits. So purchase of the business. When the business is being purchased, what will happen? We are going to debit. We are going to debit what? Purchase of business account. With the purchase consideration, so which is on 150,000 naira, and credit towards vendor account, that is double entry, 150,000 naira. So being the purchase consideration, so during the period. Now the next thing is to consider all of the assets taken over. So what are we going to do? Asset taken over, when they debit asset taken over and credits purchase consideration. So what are the assets taken over? It took over features. I'm going to double the principal. It took over the motor van. I'm going to debit that. But also it took over the debtors. It took over stock in the period. So we have 60,000 and we have 25,000 there. We have 13,500. Also we have 15,000 there. Okay. Okay, these are the assets taken over. We are going to credit purchase consideration. Okay, but through the asset taken over, we also have goodwill, which is for us to debit goodwill accounts and credit purchase consideration account. That is the rule. When there is essence of what? Excess of goodwill over purchase consideration. That is the rule. So we are going to debit goodwill account and credit purchase consideration account. So the next thing is liabilities. in the period. So liabilities taken over is to debit purchase consideration and credit what? We're going to credit liabilities account. So we're going to credit liabilities account. So take over the creditors, which is 13,000 naira. So we're going to have purchase consideration now, which is the corresponding account for everything, which is 150,000 naira. So this will balance now. The addition of everything here will give us this. So that then become being asset. So we have purchase consideration, which is the corresponding account for each of the assets and liabilities taken over and goodwill. Okay, purchase of business account rather. So we have 150,000 naira. So next thing is narration. Being assets and liabilities taken over. So now the next thing is payments of cash to the purchaser on 4th January 1997. So we 1977 rather. So when the cash is being paid to the vendor, are going to debit vendor account, are going to credit bank account or cash account, any of it. So we have 150,000 naira. We have 150,000 naira. So that will be being payment made to the vendor. So now we have done a very good one now. So I think we don't have any form of transaction again as regards to that, since there is no share capital and the rest of that. So we can open our journal, our ledger. We are asked to open ledger entries. Okay, first let's open purchase consideration account. We're going to open vendor account and we're going to open assets account. So we can now open purchase of business account. We have credit and we have debit. So we said all of the assets taken over should be credited to purchase of business accounts. So we have all of these assets taken over. So they will be debited. We have purchase of business. They will be credited to purchase of business. So we are first, we have the features, the corresponding account. We have 60,000 naira, which is W entry principal. This have explained to us. We have motor van taken over also. That will be credited to what? To the purchase of business account. So we have 25,000 naira. So we have debtors taken over 13,500. We have stock. So we have 15,000 naira. Next thing, we have goodwill paid for by the purchaser, which is 49,500. So the next thing, we have the creditor to be debited to purchase of business, liabilities taken over 13,000 naira. So the next thing is, so we said we have to debit purchase of business 150,000 naira and credit vendor accounts. Okay, with 150,000 naira. Okay, debit vendor account and credit bank account with that. Okay, so we have purchase of business, that is purchase consideration by the vendor. So by the vendor, we're going to die vendor. So that will be 150,000 naira. I think we should have a balance account now. And that is all as regards to double entry in purchase of business. There's nothing again that affects purchase of business. So we have 60,000 naira plus 25,000 naira, then plus 13,500, then plus 15,000 naira plus 49,500. So we have 163,000. So this is 163,000 also. So that is all about the purchase of business account. So we have a balance account. Now the next thing is to prepare the vendor accounts. Since it's the ledger, vendor account. So you said with this we are going to credit vendor account. So we have purchase of business, purchase consideration also. This is about the purchase consideration, 450,000 naira. Now when the payment is being made to the vendor, what happened? We credit the bank account and debit the vendor account, come to the vendor account and write bank. That is the double entry, comes to the vendor account and write bank. We have 150,000 naira. So we have this and this. Now the next thing is to prepare. We are going to prepare the vendor account. So let's prepare the features asset account. So you can prepare the features account. We said we are going to take debit asset taking over. That is purchase of business. So with that, how much is that? 60,000 naira. So we have this. So we also have a motor van. So we have purchase of business. That become an asset in the book of the what? Purchaser. We have 25,000 naira. So next thing we have debtors accounts. By purchase of business. Which is 13,500. So we also have stock accounts. So you have purchase of business. Which is 15,000 naira. Next thing is the goodwill account. So what is created? Asset created through the purchase of business. So what is paid by the what? By the purchaser. Purchase of business. So we have 49,500, and that is actually calculated excess of purchase consideration over the net assets in the period. So you've now opened the bank accounts. So you have to open the bank account now. Oh, and the creditors account, liabilities account. So liabilities creditor. So let's open the creditor account. So that will be credited purchase of business. So we have how much is that? 13,000 naira. Yeah. Next thing is the bank account. The bank account of the purchaser. So credit bank account with the vendor, with the amount of the vendor. Our vendor 150,000 naira. So we cannot prepare our balance sheet. In the period, we are achieved with all of the ledgers to double entry has been fully applied. Now is the balance sheet within the period. So we can prepare the balance sheet. In fact, we can use this as the balance sheet. We can use this as the balance sheet. So we shouldn't waste our book. We can use this as the balance sheet. Use this as the balance sheet. So this is no more your balance sheet anymore. So balance sheet of Andrew Young as January 6, 1997. Let's put it as 6 that way. As January 1997, let's put it that way. So 1977 rather. So we have this. So now you have an assets, features, which is 60,000 naira, the book value now. That means debit balance. That will make it an asset, 60,000 naira. So motor van, 25,000 naira. It doesn't matter where they are coming from. So what happened again? Debtor, 13,500. That is the book value now. He's going to have in his book. So he's having stock, 15,000 naira. So he's not going to have cash because the cash was not being taken over by him. So stock is going to have 15,000 naira. And what is the next thing? He's having goodwill brought in the book. So he paid goodwill. That becomes an asset in the business of the business at 49,500. So what happened again? Creditor, how much is that? 13,000 naira. Creditor will take over. So the next thing is bank account, and this will be checked about the capital account of the what? Since it's having credit side, we can debit bank account, credit capital account, because that is the money you paid out. That will be capital account. So you have, how much is that? 150,000 naira. So you can then balance our accounts and then balance 163,000 naira. And we have 163,000 naira. So that is the balance sheet. This is how the balance sheet of Adrian Young. This is how it look like. So Adrian Young is having all of this now. So he's having goodwill. So he's having so what he actually paid for, what he's going to enjoy in the business. So he's having that. So this is how everything will look like as regards to purchase of business. So we've talked about the purchase of business, discussion about the purchase of business, when the person was acquired an existing business, or if you have to pay for goodwill, which is the excess of purchase consideration over the net asset. And again, if the purchase consideration is less than the net asset, what are rights? The situation we are either by we are going to have the purchaser will gain, we have the gain. So that gain refers to as capital reserves, and that will be taken to the credit side of capital reserves and taken to the what? To the balance sheet as what? As reserves in the period. And again we talk about some accounting entries, so how to record purchase of business in the book of account, whereby we also take an illustrative questions. So if you have any difficulties as regards to this topic, do not hesitate to watch. So we play the video, and once again some exercises will be displayed on your screen. Please do well to attempt such questions. Thank you.